Hello, value investors. Thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Opendoor Technologies. So, for people that follow me on Seeking Alpha, you'll know that I was quite bearish this company, and they put out a very strong quarter that's kind of led me to revisit everything that I thought about this company. So, in the interest of disclosure, I don't have a position right now, but I may open a position. So this is not investment advice. This is just my thoughts. So there's a lot to talk about. So they put out a very strong guidance for the next quarter, but more importantly, they've pulled forward 2 years worth of revenue. So they're guiding that by the end of Q4 of this year, they're going to be on run rate, or what they were going to be on run rate in 2023. So this is very compelling. And even if you take into consideration the low contribution margins that are going to compress slightly, by my estimates, this is going to be approximately 500 million this year in Q4 as a run rate. So let's just dig right in, right? So what's quite interesting here is that last year, Opendoor Technologies was really during the pandemic. They were not buying a lot of properties and things were really bad for them. So any comparisons year over year are going to look really strong. You can see here for Q3 they're pointing towards more than 400% year over year growth rate. So they're very clear about this. They say don't worry too much about the year over year comps. Look at this on a sequential basis. And on a sequential basis, they're pointing towards an increase of 56% to 1.8 billion approximately. So, I mean, the company is clearly moving in the right direction. But what is really compelling is that they're saying, they don't give you a tangible number, but they say that by Q4 of this year, they're going to be where they're going to be in 2023. So that's obviously pulling forward 2 years of progress. So, I mean, this is really interesting right now because, before it was kind of like something that was moving along at a certain rate, and I had questions about the low profitability profile of this business and whether investors were paying too much for many years of growth, and there was all these kind of questions in my mind. But after I had a lot of discussions backwards and forwards with Tyler Oakland, and he'd said before jokingly that I'm very inclined to change my mind, and that he wouldn't be surprised that I would at some point revisit this and be a shareholder. So, Tyler, if you're watching this, man, good for you. You got it on spot on. So, so the one thing that I kind of feel about this company is that the margins it's going to be difficult for them to really be, an asset-light business because you're buying and selling houses. So the revenues that they're putting out there don't really have a lot of weight for me, but the margins at the bottom, once everything is then said and done, because you have to buy the property, you have to sell the property, and all those costs, these are still very much real costs. But the adjusted margins here, I think, are quite interesting. So this quarter that just went past, and the previous quarter, they had approximately double digits, 10% approximately of adjusted contribution margins, and they're saying that for the second half of the year, it's going to be back to mid-single digits. So let's say approximately 5%. So this is not a business is going to be, incredibly asset light. Yes, it is a website, but behind just being a website, they have to still go out and buy up those properties, and it's taking on a lot of risk. They say that because they have so many data points, that they can really optimize the portfolio and balance it out for what they're buying and selling. I don't know, I have question marks about that, but I don't think that investors are paying a very large multiple right now for this. So by my estimates, if we take just 5% contribution margins for Q4 and put that as a run rate, I estimate that the company is going to be making about 500 million in contribution margins. So if we grow that out next year by 40%, which I think is reasonable, I think they're growing clearly very fast, and there's a strong tailwind here that a lot of purchasers don't want to be buying and selling properties because you have to kind of prep the house, and it's very stressful, and you don't know if the sale is going to fall through. With Opendoor Technologies, they just give you the price, and they'll tell you when you can move out whenever you want over the next 90 days, and we'll just give you a cash offer, and it's an amazing operation. So all considered, I think that there is a strong tailwind that they can grow next year in 2022 at approximately 40%. I think that can turn out to be quite conservative, but let's just try and be a bit safe on this. So by reasonable estimates, the company is going to be making 700 million of contribution profits next year. That puts the stock at approximately 15 times forward contribution profit. So I don't think it's very, very expensive for a business that is disruptive and already clearly making significant progress on their profile. So you can see here, so this is what they did at the investor presentation in December. In December, they were saying that by 2023, their contribution margins would be at approximately 540 million. So they, by my estimates, by Q2, by 2022 next year, they will be already at 700 million. So I mean, it's very, very interesting business, and you're not paying a large multiple. So I mean, when the stock kind of IPO'd, everyone was very, very excited about this, and then since February, together with many of these kind of many companies since February in tech have really taken a large beating. But I think that right now this is quite compelling. So if you want to check out my marketplace types of stocks that I'm interested in, do feel free to drop in. It's called Deep Value Returns on Seeking Alpha, and you're more than welcome to do a totally free trial to see if it suits you and chat to the investment community that is growing there. And if you like it, you stick around, and if you don't, you unsubscribe anytime before 14 days, and you're not going to get cancelled, you're not going to be charged anything at all. Of course, if you like it, you stick around, and that's great. In any case, I hope to see you soon. Bye.